Boleka boss, ari ibintu Boleka. Good morning, Charles. Can you hear me? Good morning, Charles Omanyo. Good morning, class. Can you hear me, please?
Yes, we are hearing. So we wait for the others just to start.
Yes, we can hear you.
Okay. Okay, thank you, Patrick. So, Charles, can you hear me?
Yes, I can hear you.
Okay. Good morning.
Good morning.
I hope you had a very wonderful night.
Yeah, sure.
Yes. So I think we can wait like 10 minutes, and then I think 10 minutes is more. So let's have 5 minutes waiting for others, and then after 5 minutes you will be allowed to start your session. So,
Sure.
Ladies and gentlemen, good morning again. You are hearing Felicia Version as a principal examiner at ECPA, and we are together with our moderator, who will be Charles Omanyo, and of course we will have a time for presentation. And then mine is just to welcome you to this session, and for those who managed to come on time, we really appreciate your effort. It is not easy to join this session this early morning, but of course it is more important to have it, as there will be more take home, and of course this take home will guide you during the examination. So the purpose of this session is just to refresh you, as you've been attending classes at your different tuition providers. So for us, what we are going to do, we are going to give you key aspects and the tips for examination. So Charles will go in details on how a student can attempt this exam, and of course he will guide you to for time management and the other different aspects that will help you during your exams. So without taking much of the time, and within these 5 minutes of waiting, allow me to welcome Charles Omanyo, and he or can have like 2 minutes for presentation, and of course presenting key topics or table of content of what he is going to cover. So Charles Omanyo, you're most welcome, and he will be the reading moderator for this session. And before I left, I'm just going to give you an option to be a panelist and co-host, such that students can participate in this session. So participation can be done either by using chat box or Q&A dashboard. So there's two ways you can write your questions in this dashboard of Q&A, or you can use this chat box. But also you can raise your hand, of which Charles will give you a room to speak. But of course, in class, rules and regulation must be respected. So avoid disturbance, and pay attention, and of course, I hope you will take each and everything that Charles Omanyo will be displaying. So Charles Omanyo, you're most welcome.
Okay, thank you so much. And also I'm glad, and we thank ICPA for organizing this session. Maybe before you leave, you'll give me the right to be a panelist. Okay, thank you.
I'm done.
Okay.
I hope now you're a panelist. And let me give you an option to be a co-hoster, such that if my internet if my internet disconnects, the session will not be ended. Charles?
Yes.
Can you still hear me?
Yes, I can still hear you. I was waiting for you to give me the right to be the co-host.
I think you're not co-host. Can you see?
Let me check. Yes. So thank you so much. And once again, as I have said, thanks for ICPA for organizing this session. I'll be the moderator of the session. I'm called Charles Omanyo, as I have been introduced. I've been teaching management accounting for several years. It's almost now 10 years teaching management accounting, among other units. So we'll be having 2 sessions. The first session will be today. If I'm not wrong, the host, and the next session will be next week on Saturday morning. So it's an 8-hour session that will try to be as much productive as possible. We look at how do we tackle exams questions, how do we answer questions, which areas should we focus on, how do you manage your preparation time in exams, how do you allocate time to each exam question, etc. during this session. So maybe let me share some slides so that we can start off in the next 3 minutes. Also, I would like to thank you for your early attendance. Are you in a position to see the slides? Host, maybe before you leave?
No, I'm not seeing the slide, but I can see my screen is showing me that you started sharing screen, but for me, I'm not seeing the screen.
Okay, maybe it's taking time from your end. I don't know.
Yeah. So let us confirm from the side of student. So student, confirm to us that if you can see the screen, you just write in chat box. Give us a reply. If moderator screen is visible to you on your side. For me, it is not yet.
Yeah, it is not yet.
Charles, maybe it is cross-cutting. I think you can.
The chat
Share
box
it again.
is disabled.
Sorry?
We have not yet seen the screen.
Okay, let me try to, because also it's now showing me that the screen sharing is paused. Let me find out.
Yeah, try to see what is going on.
I'll just solve it in a while.
Now it's good.
It's not
Yeah,
good.
it's okay now. Yeah,
Okay,
yeah,
thank
sure.
Okay,
Welcome. So
fine.
go
I
ahead.
think the best thing to do, I think we are quite a number to start. So without taking much time, I think we can start. It's
Yeah, we
now
can
8.
start, sorry.
It's now 8:21. We can start. And thank you, host, once more. So I want us to go through what we'll be concentrating on this weekend and next weekend on Saturday. So remember, it's management accounting. And what is the objective of the session? To provide necessary exam tip planning, time management for the exams, and how should we tackle questions, and how should you also practice question. Nowadays, ICPA provides model answers in the question, in the past paper question section in the website. So how do you use the model answers to revise?
Excuse me.
Yes.
The chat box is disabled.
There is the question and answer section.
Okay.
Do you see the Q&A?
Yeah, okay, yes.
Okay. So you can be using the Q&A section if it's disabled as, okay. So I was saying that nowadays we are provided model answers that we can use to reflect on how the examiner marks our papers. So which is a good undertaking. So to start us off, I'll divide this session into 2 parts. I'll have the first maybe 30 minutes to have an overview, 15 to 30 minutes to have an overview of what should you be doing, how should you be preparing, how should you be tackling questions. That will be 15 minutes to about 20 minutes. And then the remainder of the time, we'll be looking at some few areas that we need to focus on when revising. So we'll be looking at some few questions in this session and also next week on Saturday. So my session will be divided into 2 parts. The introductory section will guide you on everything that you are supposed to do pre and also during the exams. Pre, I mean when you are preparing for the exams and also during the exams. And then after that, we'll focus our attention on some few questions from maybe from most commonly tested topics in management accounting. So that will be the way I want the session to move forward. So maybe to start us off, management accounting, to those doing CPA for the first time, management accounting is a 3-hour paper. It's actually 3 hours, 15 minutes. 3 hours, 15 minutes, 15 minutes, it's always the reading time, and 3 hours is the writing time. These are instructions that are always provided in every exams paper of management accounting. Management accounting exam has got 7 questions. Now, there is no compulsory question in management accounting. So out of the 7 questions, in the 3 hours, you should attempt at least 5 questions. Attempt 5 questions for you to be eligible to earn that maximum of 100 marks. So remember, take note, management accounting, there is no compulsory question. Out of the 7 questions given, attempt 5 questions. Marks are always allocated in each question. You can clearly see the marks allocated in each questions. Marks allocation normally guides you on the average time you should take per question. I'll be coming back to that. So remember, 5 questions out of 7. I'll also guide you on how should you select the question. Now, ensure that when reading the questions and understanding all the requirements. So when you receive the paper in the 15 minutes, please, let's make use of the questions and answers. Otherwise, I'll be forced to mute everyone, which is not good for a discursive session. Is that okay? We have rules for online, so make sure we all mute. Otherwise, I'll be forced to mute everyone, which may not be good for us. Am I clear?
Yes.
Okay, thank you. Because if people don't mute, the session becomes noisy. Because again, I'm trying to give you the right to ask questions. That's why we are not muting everyone. So I was saying that make sure in the first 15 minutes reading time, you read the questions and understand the requirements in each question. You must read the questions very carefully and identify the instructional verbs. What have you been asked? Have you been asked to identify? Have you been asked to list? Have you been asked to explain? And remember, there may be more than one thing to answer within each requirement. A requirement, maybe a question has got requirement A, B, and C. Requirement A alone can be asking you to maybe explain a certain term and then give advantages of that term that has been used. Maybe it's asking you to explain activity-based costing in one requirement and give advantages of activity-based what? Costing. So always read every word in each requirement carefully, because each requirement can be having more than one item to be answered. So you must use the max allocation to work out how much depth or how much time to allocate to each question, which means if you see a question has got 2 marks, the explanation you will give for a 2 marks question is different from the explanation you will give for a 5 marks question. So for example, if you have been asked what is a cost driver and it is 2 marks, of course you'll have to explain a cost driver is an activity what? That consumes a unit of activity that consumes resources. And then maybe you give a short example. But if it was more marks, you will have to give detailed examples. For example, you can list now cost pools and cost drivers. You show cost driver in each cost pool. Make sure that you are answering the question set and not that what you'd like to answer. What am I trying to say here? Sometimes you have read and you have a certain understanding of a certain question. Ensure you read the exam question, because you may end up asking what you may end up answering what you know, but not what you have been asked. You may end up answering what you know in that topic instead of answering what you have been asked. For example, you can be asked what is maybe the limitation of high-low method. And then you go and explain the advantages of maybe regression analysis, which are related, yes, because the advantages of regression analysis are the disadvantages of the high-low method. I'm just picking examples from different topics. Okay, so I hope that is clear. So you must clearly answer, read the question, and only answer what you have been asked. If you have been asked to explain 5 points, only make sure you explain 5 points. Now, you will be expected to manipulate numerical information using techniques learned. Perhaps more importantly, you will need to interpret that information. For example, if you have been asked to calculate a certain variance, you can calculate a variance and interpret what the variance means. You give interpretation on what the variance is asking. Remember, these are just introductory as we prepare to start. So knowledge provided by the analytical review of this information is key for managers to make what? Decisions for businesses. And this is the focus of these exams. Remember, our exams is called management accounting. What are management accounts? Accounts that are prepared to help managers in their decision making. Accounts prepared to help managers in their decision making. So knowledge of these is very important to enable us as managers make informed decisions. To enable us as managers make informed decision. Now, how do you plan for your exams? This is important. Please, let's be attentive now. Planning for your exams. Remember, we have said there are 15 minutes in exams. How do you manage these 15 minutes? In these 15 minutes, don't start attempting the question. the success of your completion of exams depends on the first 15 minutes. So the first 15 minutes is extremely important. Don't attempt any question in the first 15 minutes. The first 15 minutes, you should use it to plan how you will answer the questions. So out of the 15 minutes reading time, use the first 10 minutes to skim through all the 7 questions. So out of the 15 minutes reading time, there are 7 questions. Now, what I'm trying to say in this case, out of the 15 minutes, take 10 minutes to read all the 7 questions. So take averagely 1.5 minutes to 2 minutes in each question so that you can be reading all the questions. In the process of reading all the questions, you should identify the topics from which each question is from. So that is my point number 2. Identify the topics from which each question is from. Don't read a question and start doing it. No, read the question.
Hello? Ramsey?
Yes.
Mm.
Please. Who is this we should mute?
Mm. Você irahari iyo software.
Okay, I've muted him and I think I'll mute him permanently because he's not following rules. Okay, so we were saying that identify the topics from which each question is from. So for example, question 1, you may find it is from standard costing. You just list standard costing. You ask yourself, are you in a position to earn majority of marks in that question? Number 3, choose the 5 questions out of the 7 that you'd want to attempt. So maybe you have read through the first 10 minutes and you have found that there's a question on, maybe I'm just choosing randomly, regression analysis. You cannot attempt the question on regression analysis. So you will list the questions, 5 of the 7 questions, the ones you want to do. Remember, all these is in the first 15 minutes. Of the 5 questions, rank the questions in the order in which you'd want to attempt them. Please don't start with question 1. The first question you start with depends on the question you can earn maximum marks on them. The first question to attempt is the question you believe you can earn the maximum marks on it. So you rank them from the first that you can earn maximum marks on them to the last, which is the 5th, which you believe you can earn the minimum marks, depending on your understanding of the questions. Remember that the ranking is based on ability to attempt what? All sections of each question. Start with the question you are in a position to maximize the marks on. Now, ensure that for each question you attempt, you are comfortably in a position to get 15 out of 20 marks. That is these 5 questions. If the first 3 questions, you can get 15 out of 20. Remember, the pass mark is 50%, not 100%. So ensure the first 3 questions you attempt, you are in a position to get 75% of the question. That is 15 out of 20. 15 out of 20 times 3, that gives you about 45%. 45%, and you have only attempted what? 3 questions, and you are planning in a way that you can get 15 out of 20 for the first 3 questions you attempt. And then now for the remaining 2 questions, you can struggle and get maybe one, you get 10, and maybe another one 8, or you get 10 out of 20 and 10 out of 20. Remember, everything is all about preparation and planning for the exams. So if you can afford to get 15 out of 20 for the first 3 questions, and maybe 10 out of 20 for the last 2 questions, that's already a 65%. So the point we are trying to say, you must not get 20 over 20 in each question. Just ensure at least there are 3 questions. If they come in exams, you are comfortable to get 15 out of 20. And maybe 2 more, you are in a position to get what? 10 out of 20. So I've already said there, you don't need to get 20 over 20. Remember, it is the strategy you take. Strategy is basically the direction you take to enable you tackle the questions. So how do you manage your time effectively? And how do you identify easy marks? There will be easy marks available in all sections of the exams, and students who answer these questions usually perform well. So ensure you identify which areas can you easily get easy marks on them. You can easily earn marks on them easily. Students who do not manage their time and miss easy marks make it harder for them to pass the exams. So if there is a theory question, ensure you are comfortable in theory, because it may be a 20 marks question and maybe 6 out of 20 is theory. If you already miss on this theory, you are starting at a negative point, because you are starting and you have not attempted a 6 marks theory question. You must make sure that you are using your exams time effectively to identify any questions that you can easily tackle and plan the order in which you will answer the questions in exams. Now, regular questions that maybe are normally tested in, these are the common areas in the management accounting exams, the areas that are regularly tested on. Note the choice of the topics has been based on regularity of questions from each topic. I'm not saying this is what will be tested on, but I'm saying that these are the areas that are commonly tested in ICPA exams. There are topics that rarely misses. So number 1, variance analysis. You must be very comfortable before you go for exams to tackle questions on variance analysis. So in variance analysis, you must know how to calculate a sales variance, material variance, labor variance, variable overhead variances, and fixed overhead variances, and how to prepare operating statements related to them. So in variances, for example, in sales variance, there is the sales price variance and sales volume variance. In materials, there is material price variance and material usage variance. In labor, there is labor rate variance, labor efficiency, and also idle time variance. In variable overhead variance, there is variable overhead expenditure variance and variable overhead efficiency variance. In fixed overhead variance, there is fixed overhead expenditure variance and fixed overhead volume variance. Again, fixed overhead volume variance is subdivided into fixed overhead volume efficiency and fixed overhead volume capacity. We will be looking at that when we start tackling questions. And then last sitting, there was also a question on advanced variances. There was a question on if planning variances and operational variances, mixed variances and yield variances. We'll also focus on that. The second most commonly tested topic. When you see me posting, I'm just checking the questions and answers to see if there is a question. So the second commonly tested area is on budgeting as a topic. Now in budgeting, there are 3 areas you should focus your attention on. There is the cash budget, there is the fixed and flexible budgets, and there is the functional budgets. Last sitting in July 2022, or August 2022, depending on the date, the question was on functional budgets. Functional budgets. What are functional budgets? Sales budget, production budget, materials budget, materials usage budget, materials purchase budget, labor budget, and overheads budget. So last sitting, the question was on functional budgets. So I'm not saying you should not revise functional budget. It may still be repeated, but you should concentrate more effort on cash budgets and fixed what? Budgets and flexible budgets. Although functional may still be tested because it is still in the syllabus. But make sure you clearly understand how to prepare a cash budget and how to prepare a fixed and flexible budget. Let's go to the third most commonly tested topic, is known as process costing. Now, in process costing, there is the basic process accounts, and there is the process accounts with work in progress. There is what we call basic process account. A basic process account is a process account without work in progress. And there is process accounts with work in progress. Now, in last sitting, they tested on basic process accounts. In other words, process accounts without work in progress. So there is a high probability that in this sitting, there can be advanced process accounts. In other words, process accounts with work in progress. There is also the topic marginal costing and absorption costing. How do you prepare the profit statement using marginal costing? How do you prepare profit statement using absorption costing? I think these, according to my plan, this will be the first topic in the next revision next week on Saturday. But if we manage our time well today, we may still have time to look at it. We also have decision making. Now, in decision making, the most common area is how do you find the optimal production plan? How do you find the optimal production plan and total contribution? In last sitting, it was also tested. How do you get the optimal production plan when there is a limiting factor? Cost estimation. In the last sitting, cost estimation tested on high-low method. High-low method. I'm just trying to compare last sitting versus what we have. Cost estimation tested on high-low method. So if there is a cost estimation question, maybe they may ask on regression analysis. And then we also have the topic materials. In materials, the most commonly tested areas is stock levels and stock valuation. What do we have in stock levels? You must know how to calculate EOQ, economic order quantity. You must know how to calculate reorder level. You must know how to calculate minimum stock level, maximum stock level, number of orders, purchase price, holding cost, and ordering costs. That is under stock levels. And also the total cost of materials, which is total purchase cost plus total ordering costs plus total holding costs. And also, let me also remember, ICPA will provide the recordings of this class. Maybe by Monday, they'll provide you with the recordings of this. So you will have recordings of this class because the session is being recorded. Okay, next, there is the stock valuation. Now, when you are valuing stock, you can use FIFO method, you can use LIFO method, and you can use AVCO method. First in, first out, last in, first out, and average cost method. Now, in management accounting, the three methods are tested. But those doing financial accounting, LIFO is not tested. LIFO is not tested in financial accounting. In financial accounting, last in, first out is not tested. But in management accounting, all the three methods are tested. The reason why LIFO is not tested in financial accounting, because financial accounts follow accounting standards. There is a standard called IAS 2 inventories, which prohibits the use of LIFO. It only allows you to use FIFO and AVCO. But management accounts do not follow standards. So in management accounts, any of the three stock valuation methods can be asked. Lastly, number 8, overheads. Overheads, especially the reapportionment part. The most commonly tested area in reapportionment is how to use a reciprocal method or algebraic method, and how to use continuous apportionment method, and how to use the continuous apportionment method. Now, what are some of the mistakes that we make in exams? Some of the areas where we normally have challenges in exams. Number one, lack of ability to interpret the calculations performed with reference to the scenario given. So sometimes you lack the ability. Yes, you have done the calculations well, but you fail to interpret now your answers. For examples, in the topic decision making. In decision making, there is an area known as shutdown decisions. Under shutdown decisions, you have maybe looked at the question, you have done your calculations, and then you fail to make your decision. Maybe should we shut down or should we not shut down? The second mistake people make, so the first mistake people make is lack of ability to interpret the results you have got, the calculations you have got. You must interpret them in the topic decision making. That's just an example. Number two, poor interpretation of data. Maybe you have misread the question. The question asked you to use FIFO and you have decided to use AVCO. Or the question asked you to use AVCO method and you have used what? FIFO method. So that's again poor interpretation of data. Next, sometimes you are very genuine in what you are doing, but you have confused the methods. Maybe your understanding of process costing FIFO method contents are different from AVCO method, and you have confused them. The contents of AVCO is what you have remembered as the contents of FIFO. So you would have reinterpreted what? Wrongly, which is related to point number 3. Poor technical knowledge and failure to closely read the question. Maybe you don't have a proper understanding of a certain topic and you have not read the questions appropriately, or you have not read the questions well. And lastly, number 4, not enough practice of past paper questions. I really plead with you, practice as much questions as possible. Don't go to exams before you practice questions. It is suicidal to go for exams. At least practice some papers. And when I talk of practicing questions, I'm not telling you to read you download the past paper, you read the question and you read the answer. You will not learn anything. So when practicing the past paper questions, you attempt the past paper questions first. And then once you have attempted is when you look at the answer. Don't read the question and you read the answer. You will not understand. You will assume you know, but wait until you reach exams room is when you will know you did not understand what is there. So when revising past paper questions, attempt the question first. Once you have attempted is when you compare it to the answers the ICPA has provided, so that you can assess yourself. What did you get right and what did you get wrong? By now, all of you should have finished reading. Now it should just be the time that you are now revising past paper questions. This is not the time for reading. This is the time for revising past paper questions. So by now you should have finished your entire reading so that you have like 2 weeks to practice past paper questions. So ensure when you are practicing, as I leave this section, ensure when you are practicing questions, you read the question, you attempt it, and then is when you compare to the ICPA answers. Don't read question and read ICPA answers. You'll not be learning anything. So read question, attempt it, and then once you have completed attempting it, is when you read what the answers are and you check against what you got. You concentrate on what you did not get right. because what did you not get right is what will cost you in exams. Finally, make sure that you are always thinking about those pitfalls, those mistakes during your revision, and that each time you practice a question, you are thoroughly reviewing your answer afterwards to identify if you need to work on any of these areas. So basically, that was how to guide you in exams. In summary, what have I said? The exam is 3 hours. There is 15 minutes reading time. Don't take the 15 minutes to attempt the question. The 15 minutes, out of the 15 minutes, take the first 10 minutes to read through all the 7 questions. The first 10 minutes to read through all the 7 questions. When you are reading each question, you identify the topic from which the question is. Now, once you have done that, point number 2, you list the questions out of the 7, the 5 you want to attempt. 5 out of 7. And when you are listing the 5 questions, you list them in the order in which you will attempt the question. Remember, we have said you can even start with question number 7, so long as you believe question number 7 will give you the maximum points you can earn. So when you are listing the questions in the order in which you will attempt them, start with the question you believe you will earn maximum marks on it. And then we have said you should try to ensure the first 3 questions you have selected, you are in a position to earn at least 15 out of 20 marks. If you can earn 20, well and good. If you can earn 15 out of 20, that is already 45% for the first 3 questions. You will be left with another 2 questions that you can struggle and earn maybe 20 out of 40 in those 2 last questions. And we have said once you have done that, remember to read questions carefully, because one question can be having more than one requirement. So you must read each question carefully to know what is required of each question. And I've also said when you are revising, please don't read questions and answers. You'll not be learning anything. Practice questions. The more questions you practice, the more you improve in your time. Also take note that time is a limiting factor in exams. In other words, the time that is there is never enough. So if the time that is there is never enough, make sure you manage it effectively. How do you manage your time effectively? It starts now. You must practice as many questions as possible. When you practice as many questions as possible, you will increase your speed. Otherwise, if you don't practice question, you will find that you have taken 1 hour in one question. That will be an indicator that you may not pass. Because if you take 1 hour in one question, of course, it is impossible to pass with that. So what do you do in exams? There are questions that will take you more time. There are questions that will take you less time. If you can averagely take 30 minutes per question, please time yourself in exams. Averagely take 30 minutes for each question. 5 times 30, that is 150 minutes. 5 times 30, that is 150 minutes. 150 minutes is 2 hours, 30 minutes. So if you take averagely 30 minutes in one question, which means if question 1 takes you 35 minutes, ensure question number 2, you take 25 minutes to compensate for the time you lost in question 1. So averagely time yourself and take 30 minutes for one question. If you exceed 30 minutes, you know you will not finish the exams paper. So when you take averagely 30 minutes times 5 questions, that is 150 minutes. You will still be remaining with 30 extra minutes to review the work you have done. So you attempt a question where 30 minutes are over, check the question again. Is there anything you can add? move to the next question, move to the next question, move to the next question. Once you have completed, if you are taking averagely 30 minutes, you will have 30 minutes at the end to review your work. Remember also, make your work presentable. There are people whose work is not neat. There are people whose handwritings cannot be read. Please make sure what you write. Assume somebody else is reading your paper. Is he in a position to read what you have written? Ensure whatever you write is very clear. Avoid rubbing the work where you write and then you cancel, you rewrite on whatever you had written. If you feel what you wrote was wrong, cancel it just with a line and go below that and redo the question. Don't cancel and then you write on top of what you have canceled. It will make your work not neat. It will make your work dirty. Remember, every new question should be started in a new page. Start a new question in a new page. Don't combine questions. You start with question 1, you leave part B of it, and then you do question 2, you do question 3, and then in the next paper again, you come to question 1, part C. If you decide to start with question 1, complete the entire question 1, and then the next page, you go to another question. So what have I said? Take averagely 30 minutes in each question in exams. If you take more than 30 minutes, you know you will be time bad. Now, I'll be sharing with you these slides with ICPA, and then ICPA will share with you. Now, I've tried to list for you from each topic, the past paper questions from each topic that can enable you revise. We have in management accounting, we have averagely 14 chapters, which you should all revise. The first chapter is nature and purpose of cost and management accounting. I've given you questions there. The second chapter is cost classification. The next chapter is cost estimation. Chapter number 4 is materials. I've listed the questions, you can revise on them. Chapter number 5 is labor. Chapter number 6 is overheads. 7 is marginal costing and absorption costing. Chapter 8 is activity-based costing. Chapter 5 is cost volume profit analysis. Chapter 10 is decision making. Chapter 11 is job batch and service costing. Chapter number 12 is process costing. Chapter number 3 is budgeting. And chapter number 4 is standard costing. So I've listed the past paper questions in each chapter so that you are in a position to revise properly on them. We have taken 40 minutes to review how does the exam look like, which are the most commonly tested topic, which are the mistakes people commonly make. How should you allocate your time? We have said 30 minutes in each question. We have said the first 15 minutes is reading time. So that was how do you plan for your exams, and also how do you conduct yourself during the exam session. So what is now remaining for the next 7 hours, 3 hours today and 4 hours next week on Saturday, is to revise some most commonly tested topics. Remember, I had guided you on some of the most commonly tested areas. So I'll be picking questions from those areas: variance analysis, budgeting, process costing, marginal and absorption costing, decision making, cost estimation, materials, overheads. Otherwise, all the other areas, you can be in a position to revise on your own. Is there any burning question before we start? If there is a question, you post it in the question and answers. So I think we can now go to and practice some few questions. I'll be giving you a break at some point, but for now, let us just go straight to a question. I want us to start with the topic variance analysis to practice at least one question. Is there somebody with a question? So I want us to practice at least a question on variance analysis. So my focus today, if everything goes according to plan, today I want us, please, if you have attended the class today, make an effort also to attend the class next week on Saturday. Because next week on Saturday, the same time, I'll also be covering what I didn't cover today. So I'm just having an overview of some past paper questions. So today I want us to focus on, you can maybe note it somewhere, standard costing, that is variance analysis. Number 2, budgeting. And if we have time, activity-based costing. But today's focus, because variance costing and budgeting takes a lot of time, I want us to focus on variance analysis and budgeting, and maybe activity-based costing. And then the other areas, in the next class next week on Saturday, we will start with ABC. If we don't do it now, we will look at AC and MC, like that, and other areas, and also process costing and process costing, because I understand it's technical. So next week, we will revise activity-based costing. If we don't revise it today, we will revise process costing. We will revise AC and MC, and we will also revise either decision-making or overheads. Either decision-making or overheads. But for today, I want us to revise variance analysis and budgeting. Variance analysis and budgeting. So let's start with variance analysis. So I'll be referring to past papers. I believe we have access to past papers. So I'll be referring to past papers. I'm trying to create an Excel sheet. Just be patient with me. Okay, can somebody maybe unmute what, or in the questions and answers, what can you see in the share? Can you see an Excel sheet?
Not yet.
Not yet. Can you see it now?
Yes.
Yes.
Okay, fine. Please, let's be attentive. We don't have the laxity to cover the topics into details, but once I have any question, I'll try to cover the much we can do in a particular question. So let's try to be attentive. I hope the Excel sheet can now be seen. So the first question I want us to revise on standard costing is, if you have the past papers, you can go to it. There is December 2021 question 4. I've chosen that because it covers all standards. I've chosen it because it covers all, not all standards, it covers all variances. It covers all variances. Now, I'm again repeating, take note of the question, December 2021, question number 4. So the question reads, if you have your past papers, you can open it so that we read together. So Amarange Limited manufactures the best quality paints in various colors. I'm again repeating December 2021 question 4. December 2021 question 4. Amarange Limited manufactures the best quality paint in various colors. Can I just slightly increase it? But when I start attempting it, I'll reduce the size. So Amarange Limited manufactures the best quality paint in various colors, and the entire paint produced is sold as soon as it is produced. There is no opening or closing inventory, and work in progress is negligible. So there is no opening or closing work in progress or closing work in. What does that mean? What was produced is the same as what was sold. That is what this means. What you produced will be the same as what you sell, because there is no closing or opening inventory. Amarange Limited operates a standard costing system, and a variance analysis is conducted every month. The standard cost card for the paint is given below. Standard cost card is a card that shows the standard cost for 1 unit. The standard cost for 1 unit, the budgeted cost for 1 unit, the planned cost for 1 unit. I'm using alternative words that can be used. So direct materials, it's 0.5 kgs at 4 francs each. Direct wages, variable overheads, fixed overheads, standard cost, standard profit, and standard selling price. Next, budgeted output for the month of March 2020 was 5,100. Actual results for March 2020 were as follows. Production 4850 units, which was sold for a total of 95,600. Materials consumed in production amounted to 2,300 kgs at a total cost of 9,800. Labor hours paid for amounted to 8,500 hours at a cost of 16,800. Actual operating hours amounted to 8,000, and variable overheads amounted to 2,600. Fixed overheads amounted to 42,300. Remember, I've picked these from ICPA past paper, December 2021, question number 4. I've just screenshot it and posted it in Excel so that I avoid moving from one sheet to the other. I've just screenshot the question and posted it in Excel. Let's read the required. Calculate the following variances, and in each case, state whether the variance is either adverse or favorable. You are being asked for material price variance, material usage variance, labor rate variance, labor efficiency variance, idle time variance, variable overhead expenditure variance, variable overhead efficiency variance, fixed overhead expenditure variance, fixed overhead volume efficiency variance, fixed overhead volume capacity variance, selling price variance, sales volume variance, 12 marks. In short, the question is asking you, calculate all variances. That is in short. Prepare an operating statement of Amarange Limited. So that is the question that we have. So let me slightly reduce so that I can read the question and we attempt it. Now, this is standard costing. So in our solution, we are in the chapter standard costing, variances, or let me call it variance analysis. That is the chapter in which we are. Now, I chose this question because it has asked us on all variances. So by the time we finish it, we would have revised all variances. So I want to start covering all variances, and I'll start with the first variance. I'll call it sales price variance. I want to cover all variances. So I'll abbreviate it as sales price variance. Now, in order to get the sales price variance is normally equals to budgeted price per unit minus actual price per unit times times actual quantity. That is the formula that you need in order to calculate a sales price variance. Budgeted price per unit minus actual price per unit times actual quantity times actual quantity. Now, we need to identify the items, each item. What is the budgeted price per unit in this question? We need to look for our budgeted price. Let's come here. The standard cost card for the paint was as follows. Here, standard selling price is 20. So our standard selling price is 20. I've posted it there. That is the budgeted price. Budgeted is the same as standard. Next, our actual price per unit. We go and look for the actual price per unit. We come to actual information, which is here. Production of 4,885 units was sold for 95,600. So the actual price per unit is 95,600 divided by 48.50. 95,600 divided by 48. I'm just trying to slightly increase the size. Divide by, so is equals to 95,600 divided by 48.50. It gives you, now in variances, you must be very careful of decimal points. Never round off a variance. It gives you, don't round off a variance. Whatever you get in a calculator, for example, if this you get 19.71 something, you just put some 2 dots to show that that figure is continuing in exams. You just put it like that. And then finally, we need to identify what is the actual quantity. Actual quantity. Production of 48.50. Remember, there was no opening or closing stock. So what was produced is what was sold. Actual quantity is equals to 48.50 units. Now we have everything to calculate the variance. So what is our sales price variance? Sales price variance is therefore equals to 20 minus 19.71, close the bracket, times 48.50. That gives us the variance. It gives us a variance. So what is the variance? You always start with the higher figure. The higher figure is 20 minus 19 times 48. So it gives you 1,400. Now, how do you reason the variance? We had planned, we had budgeted to sell at 20. We actually sold at 19. So we sold at a less price. We lost. So when you lose, it is A. A represents adverse. So that is the first variance. Sales price variance. Sales price variance. The second variance, we need to know, remember, we must manage our time effectively so that we practice as much questions as possible. So that we practice as much questions as possible. I'm trying to manage the time. So the second variance is sales volume variance. Now, under sales volume variance, even though we were not asked, I'm covering everything whether we are asked or we are not asked. Their sales volume variance depends on whether absorption costing or marginal costing is used. How you calculate the variance depends on which technique have you used. Have you used marginal costing or have you used absorption costing? I'm trying to read the question to see what we were asked. Sales volume profit. So you have been asked sales volume profit. So you have been told what to use. I will explain. Now, so there is the first, there is a sales volume variance when we use profit. When we use what? Profit. That is in short under what we call absorption. Profit is used under absorption costing. So, but I'll cover both, but the examiner told us to calculate only profit. So sales volume variance will be equals to budgeted quantity minus actual quantity, that is the quantity you sell, close the bracket, times budgeted profit per unit. Please note, the question told you use what? Sales volume profit. So take note of this formula. Using sales volume profit, let me paste it here so that I skip a space. So sales volume, either here you can use budgeted profit or budgeted contribution. But what were you told to use here? You are told to use profit. You are told to use profit. So you are told to use profit in that question. So let's list the figures. What is our budgeted quantity? Our budgeted quantity is budgeted output for the month of March 2020 was 5,100 units. So budgeted quantity is 5,100 units. Next, actual quantity. Actual quantity, production was 4,850. So actual quantity is 4,850 units. Next, we have budgeted profit per unit. Okay, sorry for that. Budgeted profit per unit. Our budgeted profit per unit in the question here, standard profit, standard is the same as budgeted, is 6. You can see the 6. So we can calculate the variance. Sales volume variance is therefore equals to 5,100 minus 4,850 times 6. So what do we have? We have 5,100 minus 4,850 times 6. So it gives you 1,500. Now look at this. We had planned to sell 5,100 units. We actually sold less. So the variance is adverse. Why is it adverse? Because you sold less than what you had planned. So I'm taking note of my variances there. Okay, so that is sales volume variance under absorption costing. But we were not asked the second one, but because we are revising, let me also calculate sales volume, because we are just revising variance. When you use contribution. So when you use contribution, it means it is under marginal costing. It is under marginal costing. Take note of that, please. Sales volume variance depends on whether you are using marginal costing or you are using absorption costing. So let's rewrite the formula. Sales volume variance will be equals to budgeted quantity remains the same, quantity, minus actual quantity times budgeted. Where there was profit, you replace it with contribution. Contribution per unit. Now, budgeted quantity remains the same. Actual quantity remains the same. What is different is budgeted contribution per unit. So budgeted contribution per unit is equals to budgeted selling price minus budgeted variable cost per unit. Okay. Now look at this. Budgeted, I'm just trying to be slow. Variable cost per unit is equals to, in this question, direct materials plus direct wages plus variable overheads is equals to 2 plus 4 plus 0.6. That is the budgeted variable cost. So that gives you 2 plus 4 plus 0.6. What do we get? 6.6. That is budgeted variable cost. Now, budgeted contribution per unit will therefore be equals to budgeted selling price is 20 minus 6.6, whatever result you get. So that gives you 20 minus 6.6. What you get is, if we 13.4. So sales volume variance is therefore equals to budgeted quantity, which was 5,100, it has not changed, minus actual quantity is 4850, it has not changed, times 13.4. So it gives you 5,100 minus 4850, close the bracket, times 13.4. It gives you 3,350. So adverse. So if you are asked sales volume variance using contribution, this could have been the answer. You are not asked that. I'm just answering it because I don't know what the examiner can ask. The third variance after sales is material. Materials price variance. Material price variance. So I'll call it material price variance. Now, in materials price variance, if you have read, you should know that material price variance is equals to budgeted price per kg minus actual price per kg times actual quantity. And the quantity here is raw materials. Quantity is raw materials, which is in kgs. So let's look for materials. So we'll start by what is the budgeted? What is the budgeted price per kg? We get it, and then we also get what is the actual price per kg. We also get the answer, and then also we get the actual quantity, which is in kgs. Okay, I don't need to write in kgs. We should know it's in kgs. So budgeted price, budgeted materials. You can see we are in materials. What is the budgeted price per kg for? 0.5 kgs at 4. So budgeted price per kg is 4. What is the actual price per kg? We come to actual is down here. Materials consumed in the production amounted to 2,300 kgs at a total cost of 9,800. So actual price per kg will be 9,800 divided by 2,300 to get the actual price per kg. So it will be 9,800 divided by 2,300 kgs. So it gives you, maybe let me round off to see, 4.26. And then actual quantity, we already know it, is 2,300 what? Kgs. So we can now get material price variance is therefore equals to budgeted price is 4 minus 4.26 times 2,300. What do we get? So we get 600. Now, these materials is expenditure. Materials purchase, materials is cost. It's a cost, it's an expenditure variance. We had budgeted to buy raw materials at a price of 4. Here, at a price of 4. But we actually paid 4.26. So we lost because we spent more. This is expenditure. We had budgeted to spend 4. But we spent 4.26. So this will be adverse because you spent more. That is material price variance. Number 4, we have materials usage variance. Into bracket, material usage variance. Now, in materials usage variance, it's equals to budgeted quantity for actual production minus actual quantity. I'm just quoting the formulas you learned in class, times budgeted price per kg. So that is the formula you learned in class. So budgeted quantity for actual production. In other words, budgeted quantity for actual production. For actual production, budgeted quantity is 0.5, if you can see here. budgeted quantity is 0.5 kgs. What was our actual production units? Production was 4850. So 0.5 kgs times 4850 units. That is what gives you the budgeted quantity for actual production. So 0.5 times 4850. It gives you 24.25. Next, actual quantity. What is our actual quantity? Our actual quantity of materials is 2,300 kgs. 2,300 kgs. Next, budgeted price per kg. What is the budgeted price per kg? Here, 0.5 at 4. So budgeted price per kg is 4. So we can come and calculate material usage variance is equals to 24.25 minus 2,300 times 4. So this gives you 24 minus 2,300 times 4. It gives you 500. Now, we had budgeted to use 2,425 kgs. We actually used less, 2,300. Therefore, we gained because we spent less. Favorable. I'm repeating. We budgeted to use 24.25. We actually used 2,300. So we used less. We used less. That is material usage variance. We are done with material variances. So we have so far covered sales variances. We have so far covered material variances. Let's go to the third category of variances. So it will be my number 5 here. Number 5 will be labor rate variance. Labor rate variance. Labor rate variance. Now, how do we calculate labor rate variance? Labor rate variance is equals to budgeted rate per hour minus actual rate per hour times actual hours paid. Actual hours paid. I've not said actual hours worked. Rate measures what was paid. So if what hours paid is different from hours you worked, sometimes the hours you work is different from the hours you were paid. So you find the hours paid. So let's start one by one. What is our budgeted rate per hour? Our budgeted rate per hour is equals to, look at direct wages, 2 francs per hour. So it is 2. I can write there 2. Next, actual rate per hour. Actual rate per hour. Were we given paid? Paid, not used. So here, labor hours paid amounted to 8,500 at a cost of 16,800. 16,800. So it will be 16,800 divided by 8,500. I'm repeating. Actual rate, labor hours paid amounted to 8,500 at a cost of 16,800. 16,800. So what do we have here? 16,800 divided by 8,500. So whatever rate it is, it gives you 1.98. So finally, what are the actual hours? Actual hours paid. The actual hours paid, we already know it as 8,500. Those are the hours paid. Therefore, labor rate variance is equals to budgeted rate of 2 minus actual rate of 1.98. You multiply by 8,500 to get the variance. So that gives you 2 minus 1.98 outside the bracket, you multiply by 8,500. It gives you 200. Now look at this. We had planned to pay our employees at a rate of 2. We actually paid at a rate of 1.98. We gained. Why did we gain? We paid them less. If we paid them less, we gained. We benefited. So it becomes what? Favorable. It becomes favorable because we paid them less. We saved something in short. Number 6, there is labor efficiency variance. Labor efficiency variance. I'll abbreviate it that way. Now, labor efficiency variance, the formula is budgeted hours for actual production minus actual hours worked. Efficiency measures what you worked times budgeted rate per hour. Efficiency measures not what you are paid, but rather what you worked. So let's start with budgeted hours for actual production. Let's find out what is our budgeted hours for actual production. Direct wages was taking 2 hours. You can see the 2 hours. For actual production is 48.50. 48.50. So 2 hours times 48.50 units. So that gives you 2 times 48.50. It gives you 9,700 hours. And then you have actual hours worked. Actual hours worked, not paid. Efficiency measures what was worked. Let's come here. Labor hours paid amounted to 8,500. But below here, actual operating hours amounted to 8,000. So the operating hours are the hours worked, 8,000. So actual hours worked is 8,000 hours. So, and then you multiply by budgeted rate per hour. This one we already used it here too. Budgeted rate per hour was to this rate here. So what is labor efficiency variance is equals to budgeted rate is 9,700 minus actual rate is 8,000 times 2. So We have 9,700 minus 8,000 times 2. So this gives you, so 9,700, look at this. We had budgeted to work 9,700 hours. We actually worked less hours. Therefore, we gained as a company. So we gained. So it is what? Because we spent less hours. So that becomes what? Favorable. There is also another variance we were asked. Let me call it number 7. We were also asked to calculate idle, if you remember, idle time variance. You are also asked to calculate the idle time variance. So I'll call it idle time variance. We were also asked to calculate that before we forget. Idle time variance is equals to hours paid minus hours worked. What you are paid minus the hours you worked times budgeted rate. Budgeted rate per hour. Now, what are the hours paid? Hours paid here. Labor hours paid amounted to 8,500. Hours paid is 8,500. Hours worked was 8,000. So these guys were paid for excess hours. Now, budgeted rate per hour is 2. Was it 2? Yes, 2. So what is idle time? Idle time variance is therefore equals to 8,500 minus 8,000 times 2. So this gives you, into bracket, 8,500 minus 8,000, close the bracket, times 2. It gives you 1,000. Now, idle time is obviously adverse because idle time is the time you pay that employees are not productive. The hours employees are not productive. Hours employees are not productive. Let's move a step further. Now, number 8. We were also asked to calculate. I'm covering all variances. That's why it's taking me time. Variable overhead expenditure variance. Variable, so I'll abbreviate it as variable overhead expenditure variance. Expenditure. So variable overhead expenditure variance is equals to budgeted rate per hour minus actual rate per hour times actual hours. So variable overhead expenditure variance is budgeted rate per hour minus actual rate per hour times actual hours. But these are variable. The key word there is variable. We are using variable. So we look for each of the items. Budgeted rate per hour, variable, that is the keyword. Next, actual actual rate per hour, variable again, and then times actual hours. What I advise you, if you have access to past papers, always just have it besides you, so that anything which is not clear, you can check. Now let's look for budgeted. The keyword there is variable. So what is the budgeted rate per hour? Variable. Look at this. Variable overheads. The rate was 3 per hour. You can see this, 3 per hour. So variable is, sorry, is it 3? 0.3, sorry, 0.3. Budgeted rate is 0.3. 0.3. Actual variable. Let's come to the actual section here. Variable overheads amounted to 2,600. And how many operating hours were there? 8,000. 2,600 divided by 8,000. 2,600 divided by 8,000. 2,600 divided by 8,000. So that gives you 0.325. What are the actual hours? The actual hours are 8,000. So we can get variable overhead expenditure variance is equals to 0.3 minus 0.325 times 8,000. What does it give us? You start with a higher one, minus that to avoid a negative answer, times 3,000. So 8,000, sorry. It gives you 200. Now, we had budgeted to spend at a rate of 0.3. We spent at a rate of 0.325. We spent more. So that is adverse. We spent more. We had budgeted to spend 0.3. We spent more. We spent 0.325. That becomes adverse. Next, number 9. Variable, we are almost there. Let's just be patient. Variable overhead efficiency. So variable overhead can either be efficiency or expenditure. Efficiency variance. So I'll call it variable overhead efficiency variance. So variable overhead efficiency variance is equals to budgeted hours for actual production minus actual hours times budgeted rate per hour. Let's begin here. Budgeted hours for actual production variable. The keyword there is variable. Let's look for it. Budgeted hours variable is here. 2 hours for actual production is 48. 2, which is variable, times 4850. Which is 2 times 4850. Two times 4850. It gives you 9,700 hours. And then we look for what were the actual operating hours. Actual operating hours. Our actual operating hours were 8,000. Was it 8,000? Actual operating hours, 8,000 hours. And budgeted rate per hour. Budgeted rate per hour. What is our budgeted rate per hour? Variable, 0.3. 0.3. 0.3. Again, I've said ICPA will share with you this Excel sheet. So just make sure what is important now is to understand and to follow. Variable overhead efficiency variance. ICPA will share with you this 700 minus 8,000 times 0.3. What do we get? We again that minus that times 0.3. So what do we get? 510. We had budgeted to use 9,700 hours. We used less. So that's favorable. Favorable. We used less. So that is variable overhead efficiency. Number 10, there are very many variances. Fixed, but we are almost there. Fixed overhead variance. Remember, explanation is what is taking time. Fixed overhead, expenditure variance. In exams, you are not explaining, you are just doing it. So in exams, you should be faster. Fixed overhead expenditure variance. So fixed overhead expenditure variance. Now, fixed overhead expenditure variance is equals to budgeted fixed overhead expenditure minus actual fixed overhead expenditure. So we start with what is our budgeted fixed overhead expenditure. We'll need to get it. Budgeted fixed overhead expenditure. Were we given? No, we must calculate it. Fixed overheads is 7.4 per unit. How many units did we budget to make? 5,100 units. Budgeted output is 5,100. Fixed overhead per unit is 7.4. So 7.4 times 5,100. 7.4 times 5,100. So what do we get? Is 7.4 times 5,100. So it gives us 37 that, and then we get actual fixed overhead expenditure. This one I think we were given, if I'm not wrong. Actual fixed overhead expenditure here. Fixed overhead amounted to 42,300. 42,300. 42,300. So what is our variance? Fixed overhead expenditure variance is equals to 37,740 minus 42,300. Now, variances, don't always write it as a negative. All variances are positive. It is just that you must decide whether it is favorable or adverse. All variances are always positive. The only difference is either it is favorable or adverse. Let's reason out this variance. We had budgeted to spend 37,740. We actually spent 42,300. 42, we spent more. So it becomes what? Adverse, because that was expenditure. Next, we have number 11, fixed overhead volume variance. Remember, I'm even calculating what we have not been asked. Like this one, we were not asked. I'll tell you what we were asked. We were not asked this. I'm calculating all variances that are possible. Fixed overhead volume variance. So fixed overhead volume variance, here it will be fixed overhead volume variance. Now, fixed overhead volume variance is equals to budgeted production units minus actual production units times budgeted fixed cost per unit. So let's start one by one. What is the budgeted production units? And then actual production units. And then budgeted fixed cost per unit. So what is our budgeted production units? Let's come and focus here. Budgeted output for the month was 5,100. Actual was 4850. 5,100, 4850, and budgeted fixed cost per unit. What is our budgeted fixed cost per unit? It is 7.4. 7.4. 7. So we have everything that we need there. Fixed overhead volume variance is equals to 5,100 minus 4850 times 7. So that gives us 5,100 minus 4850 times 7. No, it was not 7, it was 7.4. Hey. It was 7 point. Now look at this. We had budgeted to produce. Remember, what was produced is what was sold. We had budgeted to produce 5,100. We actually produced 4850. We had budgeted to produce 5,100. We actually produced 4850. So we produced less. So it becomes adverse. Please note, we have finished all basic variances. Note the following. Note the following. Under. So note the following. Note number 1. Under marginal costing, we don't have any fixed overhead volume variance. Take note of that, please. Variance. So under marginal costing, we don't have this variance. It is only, so fixed overhead volume variance is only under absorption what? absorption costing. And a marginal costing, we don't have. That is note 1. That is note 1 I want you to remember. Note 2, which I also want you to keenly remember. Fixed overhead volume, fixed overhead volume variance, which we have said is only under what? AC, is subdivided into 2. Take note of that. Fixed overhead volume variance which is only under AC, is subdivided into 2. The first one, or let me call it A, we have fixed overhead volume efficiency variance. And number B, we have fixed overhead volume capacity variance. So fixed overhead volume variance can either be fixed overhead volume efficiency or fixed overhead volume capacity. Let's start with the first one. Fixed overhead volume efficiency variance. So I'll abbreviate it as fixed overhead volume efficiency variance. So take note of the formula again. Fixed overhead volume efficiency variance is equals to budgeted hours minus actual hours times budgeted fixed cost per hour. I'm repeating, fixed overhead volume variance is equals to budgeted hours minus actual hours times budgeted fixed cost per hour. So let's find, we start one by one. Budgeted hours. Will be equals to, let's go to the question. Budgeted hours. Remember, I'm teaching the topic. That's why I'm taking time, because these are very important topic in exams. So budgeted hours fixed is 2. You can see 2 hours times budgeted units is 5,100. So 2 hours times 5,100. So we have 2 hours times 5,100 units. Whatever it gives us, 2 times 5,100. So it gives you 10,200 hours. Next, actual hours. Actual hours, I even remember it was 8,000. Actual hours was 8,000 hours, operating hours. 8,000 hours. Now what is remaining is budgeted fixed costs per hour. What is our budgeted fixed cost per hour? Budgeted fixed cost per hour, fixed cost is 3.7 per hour. I hope you can see this. 3.7 per hour. 3.7 per hour. So what is our fixed overhead volume efficiency variance? We had budgeted to use 10,200. We actually used 8,000 times 3.7. What result do we get? What result do we get? Minus 8,000 times 3.7. So it gives us 81. So we had used less. So it becomes favorable because we had used less. Finally, B, fixed overhead volume. We said the other one is volume what? Capacity variance. So it will be fixed overhead volume capacity variance. So let's get the formula. Fixed overhead volume capacity variance is equals to budgeted hours for actual production. Take note of the difference between efficiency and capacity. Efficiency is budgeted hours in total. Capacity is budgeted hours for actual production minus actual hours times budgeted rate per hour. So what does that give you? Times budgeted rate per hour. So we start with budgeted hours for actual production is equals to budgeted hours for actual production is 2 hours. Actual production was 48.50. 2 hours times 48.50. So 2 hours times 48.50. Remember, 48.50 is the actual production. So 2 times 48.50. So it gives you 9,700. Actual hours does not change. Actual hours is 8,000. It has not changed. And budgeted fixed cost per hour also has not changed. Budgeted, I'll talk of budgeted fixed cost. Let me just write the right. Budgeted fixed cost per hour. So budgeted fixed cost per hour. Fixed cost per hour has also not changed. It is 3.7. 3.7. So what is our variance? Fixed overhead volume capacity variance is equals to 9,700 minus 8,000 times 3.7. What do we get? 9,700 minus 8,000 times 3.7. It gives you 62. That. Now look at this capacity utilization. Did we fully utilize the capacity that was set? Capacity utilization. We had set a capacity of 9,700. We did not fully, we actually used, we underutilized the capacity. So because we underutilized, it becomes adverse. You underutilized the capacity that was set. We underutilized. The last note. The last note. Fixed overhead volume variance is equals to fixed overhead volume efficiency variance plus fixed overhead volume capacity variance. That covers all variances that we are in need of. We are trying to say, when you take this plus that, so fixed overhead, in other words, we are trying to see 8140 F plus 6290 A. One is a negative, the other is a positive. So you get the difference. So which one is more? One is a positive, one is a negative. This one is positive, favorable. This is negative, adverse. So which one is more? The favorable is more. 1850. It should be the same as this. You see this? Why is it favorable? Have I reasoned the variance differently? Maybe my reasoning here was different. We produced less. That is right. Why is 1850 is right? But now this adverse is what I'm wondering why I'm getting favorable here. Efficiency. Okay. Efficiency. We had budgeted okay, I'll find out why it's that. Because efficiency, is it capacity utilization? I'll find out why this is favorable, but I think it should remain like that. It should remain like that. I'll find out why there is a difference of favorable and adverse. But this is just a reconciliation. Reconciliation should confirm that the variance is the same. The variance is the same. Can you give me 5 minutes to summarize whatever we have learned? Now, variances are summarized in what we call an operating statement. I'm repeating, variances are summarized into what we call operating statement. So you can start with absorption costing, variance, operating statement. So in an operating statement, you list, let me hide this first so that I explain. Let me hide this. In an operating statement, you list all the variances that you have. All variances that you have. All variances that you have. Remember, our currency is in Rwandese francs. I'm trying to prepare an operating statement to summarize, and then we finish this. So you always start with, in an operating statement, it starts with what we call budgeted profit, and it ends with actual profit. Now, let's look for our budgeted profit in this question. What is our budgeted profit? 6. You can see 6. 6 is the budgeted profit per unit, times budgeted units is 5,100. 6 times 5,100. So we have budgeted profit is 6 times 5,100. So what does this give you? It gives you 6 times 5,100. It gives you 30. And then you account for all variances. If a variance is favorable, you add. If a variance is adverse, you less. add all favorable variances and subtract all adverse variances. So we'll start with sales price variance. And then we'll go to sales volume variance. And the volume variance that you use is the one under absorption. The one under absorption costing. The one that uses profit, because we are under absorption costing. So sales price variance. Now I can open this. So we look for what is our sales price variance. It was adverse. So if it is adverse, you less 1,400. Remember, it is adverse. So remember there it is adverse. Next, sales volume under absorption costing 1,500 adverse. 1,500 adverse. If it is adverse, you less. So what is our profit after accounting for sales variances? Profit after sales variances. Profit after accounting for, you less all adverse. AJ7. AJ7. So you less, so what we get? Less. If it's adverse, you less. And then you come and now account for all your cost variances. You list the cost variances that are favorable. You list the cost variances that are adverse. All cost variances. You come and list all cost variances or all expense variances. All expense variances, you come and list them. So we'll list all variances we have calculated. Material price variance. There was material usage variance. I'm listing all the variances. There was labor rate variance. There was labor efficiency variance. There was idle time variance. There was variable overhead efficiency variance. There was variable overhead expenditure variance. There was fixed overhead expenditure variance. There was fixed overhead volume variance. We have listed all. And then you get the total cost variances. So we just list them. If it is F, we post it on the F column. If it is A, we post it in the A. So let's look at the cost variances. Material price was A. Material price was A. This one was A. I've posted it in the A column. Next, usage. Material usage was F. Material usage, I post it in the F column. Material usage was F. You post it there. Next, labor rate. Labor rate was F. Labor rate was F. You post it in the F column. Labor efficiency was A. F, sorry. Labor efficiency was F. Labor efficiency was also F. Idle time was A. Idle time was A. Next, we have variable overhead efficiency. Variable overhead efficiency was variable, let's check. Variable overhead efficiency, sorry, expenditure first, was A. Variable overhead expenditure variable, I'm just going to pick it, just be patient. 200A. Efficiency is F. Efficiency, variable overhead efficiency is F. Fixed overhead expenditure. Fixed overhead expenditure. Fixed overhead expenditure, where is it? 4560A. Fixed overhead expenditure. It is 4560A, and volume is also A. There are a lot of A's. Fixed overhead volume is also fixed overhead volume is A. Okay, fine. So we have accounted for all variances, and then you get the total. The total cost variance. You get the total. The total of each. Now, which one is more? If I put 0 here so that I can underline, which one is more? A is more. So I'll get this minus that. So if it's adverse, we said you minus. So we will have this minus this cell here is AJ 19. AJ 19. So it gives you 24,100. Now, this final answer we get is called actual profit. If you want to know that your statement is correct, if you want to know that your statement is correct, you come here. You take all your costs minus all your sales. This was your sales. 95 minus this, minus that, minus that, minus that. It should give you the actual profit. It should give you the actual profit. What I advise you, please now use this question to revise this topic, because this question has covered all variances. It took me a lot of time because variances have a lot of explanations, but remember, in exams, you'll not be explaining, you'll just be solving it. Any question on this? Any question on this? This is an operating statement. Any question? Note. Add all favorables to and subtract all adverse from the budgeted profit. So that is standard costing. I hope you'll be in a position to attempt any question on standard costing. It has taken as much time. I want us to break for some few minutes, but avoid logging out, please. I'm giving you a 15 minutes break. Please don't log out, because if you log out, there will be a problem. Just 15 minutes to break to leave your seat? Patrick, say I did not we. Yeah? Patrick, you did not see variable overhead efficiency variance formula. Variable overhead, this one here, Patrick, that one. Variable overhead efficiency, the formula is budgeted hours for actual production minus actual hours times budgeted rate per hour. Budgeted hours for actual production minus actual hours times budgeted rate per hour. ICPA will share with you this Excel sheet. I'll share with ICPA, and then they will share with you the Excel sheet. Please revise on that. Why don't we have 15 minutes break? It was supposed to be around 20 minutes, but because I'm trying to manage my time well. So it is now 10:26. Let us meet at 10:30, 10:45, 10:45. So 15 minutes break. We resume at 10:45 a.m. Please take note, we are resuming at 10:45 what? a.m. So please avoid logging out so that I don't struggle to admit you. So we resume at 10:45. Avoid logging out. You can just leave it on, but at least relax out of your seat. So at 10:45, we resume. I hope we are all back. Are we back? Response in the chat.
Yes, we are back. We are
Okay,
back.
okay, thank you. I hope you learned something about standard costing. Did you learn something? Now, let us go to budgeting. I don't want to go back to the slides. So let's go to budgeting. Now, budgeting, last sitting, that is in August 2022, the examiner tested on functional budgets. So there is a very high chance that this sitting, they can test on cash budget or flexible budgets. I'm going to do only cash budget, but in flexible budget, if you want to practice a question on flexible budget, I can later on provide a question. Topics that I'll not manage to cover, maybe I'll pick some few questions, random questions, and solve them before the next class. Because this session is very short, we cannot cover all questions. So I'll only focus on cash budget, but remember also to revise flexible budget. What is a flexible budget? A budget that is adjusted to reflect actual activity. A budget that is adjusted to reflect actual activity. There is flexible budget that is adjusted to reflect what? Actual activity. I hope we are together there. Now, there is an example I'll be doing in management accounting, but of CAT on Thursday. On Thursday next week, CAT management accounting, and flexible budget will be one of them. So if you have time, Thursday next week at 5 p.m., you can also join the session. Is it clear? If there are some areas, because management accounting is almost the same, it's just that the setting of the questions that is different. Thursday, I'm meeting them on Monday, but Monday I'll be covering what is specific, but on Thursday, I'll be covering also what is general. But you can make your own informed decision. So let's move to cash budget. Now, in a cash budget, it's a budget that shows cash. It's a budget that shows cash inflows and cash outflows. Let us all mute, please. Okay. Now, a budget that shows cash inflow versus cash outflow. Now, to guide us in this topic, I have chosen April 2021. April 2021, I've been choosing latest questions, is what I'm trying to focus on 2020, 2021, and 2022, unless let me try muting somebody. Okay, so let's look at April 2021. If you have that past paper, open it so that we can look at it. April 2021, question number 1. April 2021, question number 1. If you have that past paper, open it. April 2021, question number 1. So that will be our focus. I hope you can see the Excel. Let's start. April 2021, question number 1. Budget control is the practice. April 2021, question number 1. A, part A. Budget control is the practice of establishing budgets which identifies the area of responsibility for individual managers and of regularly comparing actual results to expected results. Number 1. Referring to the above statement, explain at least 5 purposes of budgeting. 2.5 marks, very few marks, so 0.5 marks per explanation. Actually, this should have even been a list question because those marks, but just explain, those are very few marks. So you are being asked, what is the purpose of? So my solution, this one, please just read on it. A Roman 1, you are being asked, what is the purpose of budgeting? I'll just list them, but please go and research on it. The first purpose on budgeting, it helps in planning for the future. Budgeting. So number 1, it helps in planning for the future. Budgeting also number 2, it helps in authorization. I'm just choosing authorization of expenditure. I'm trying to rush so that we focus on calculation. Number 3, it helps in coordination. Coordination of activities of different departments. Number 4, it helps in performance evaluation. Performance evaluation. Your performance can be evaluated in relation to what was in the budget. Number 5, it can help in communication of targets of the business. Number 6, it can help, so that you just choose any 5. Number 6, it can help in motivation of employees. Number 7, it can help in control of costs or expenditure, etc. You can pick any of the 5 and you run away with it. You just explain them. So what is the purpose of budgeting? I hope we are okay in that. Let's go to number 2. Number 2 is asking you, explain the following types of budgets and give at least 2 advantages of using each one of them. Okay, explain, and 1.5 marks each. Okay, activity-based budget. Explain the following types of budgets. Explain the following types of budgets. These ones you can read on, especially on the advantages you can read on. So the first type of budget is activity-based budget. So what is activity-based budget? Budget prepared following the principles of activity-based costing. It uses cost pools and cost drivers. But because of the nature of the marks were very few, so I don't need to go into details. So cost pool is an activity that consumes resources. Cost driver is a unit of activity that consumes resources. On advantages, that one I cannot help you much. Just read on the advantages of activity-based budget. It helps to identify the unit of activities. It helps associate overheads with activities that cause them. It is more detailed explanation on the causes of activities, etc. Those ones you can read on. Number 2, there is zero-based budget. So a budget prepared from scratch does not rely on the previous periods budget. Every item included in the budget must be justified. In other words, you must defend why you included every item. What is an advantage of zero-based budget? The figures that are always posted in the budget are real. They are actual. They do not rely on the previous what? Years. So we base it and then the second advantage, every item that is included is already justified. To justify is to give reasons why you need an item in the budget. The theory parts, I believe you can read on them. There is not much we can do there. So let's go to part B of the question and we read it first. So it's asking you, how did they put this? Part B, cash budget for Horizon indicating receipts and disbursement, and determine whether or not. So cash budget for Horizon Limited. So here we'll have Horizon Limited, cash budget for the month of May, June, and July. For the month of May, June, and July. For the months of May, June, and July 2019. So we want to look at cash budget for those months of May, June, and July 2019. So we will have May, we will have June, and we will have July. And then if necessary, we'll have total. So let me repeat again, May, June, and July. So those are the months we will have. I'm just trying to be more presentable. Okay, so May, June, and July. Okay, so let's read the question. Horizon Limited is a company incorporated in Rwanda and deals in the real estate development. The below data relates to forecasted and actual sales of completed apartments for the 4 months of 2019. Actual sales for the 4 months of actual sales for the month of January, February, March, April. Actual sales, note those are actual. Number of apartments, and the amount is 135 million until 150 million. Forecasted sales for the month of May, June, and July. Remember, we were asked for a budget of May, June, and July. May, June, and July, the forecast has been provided. Additional information. Additional information 1. Accounts receivable, 50% of total sales are for cash. 50% of total sales are for cash. The remaining 50% will be collected equally during the following 2 months. So the remaining amount will be collected equally during the following 2 months. The firm incurs a negligible bad debts loss. So the bad debts loss can be ignored because it's negligible. It's a very small amount. Next, we are being told cost of construction is 70% of sales, and 90% of this cost is paid in the following month. Selling, general, and administrative expenses are 1.5 million per month plus 10% of sales. All these expenses are paid for during the month of incurrence. Interest payment, an interest payment of 275 million of bonds outstanding. Payment on 275, sorry, on, not of, on 275 on bonds outstanding, the interest is 12%. In other words, the coupon is 12%, is paid during July. Remember, we have not paid 275, we have paid interest on 275. An annual 95 million sinking fund payment is also made at that time. So payment is also made of 95 million. Dividends, 15 million dividends payment will be declared and made in July. Capital expenditure, 90 million will be invested in plant and equipment in June. Taxes, income tax payments of 1.5 million will be made in July. Next, we are being told the company wishes to maintain at all times a minimum cash balance of 40 million. Point number next. On 30th April 2019, the company had a balance of 40 million in its bank account required. Prepare a cash budget for Horizon Limited indicating receipts and disbursements for May, June, and July. May, June, and July. Determine whether or not borrowing will be necessary. Borrowing will be necessary during the period, and if it is, when and how much. So there is a question here. Let's agree on the currency to use, sorry, not currency, in the amounts to use. We can decide to work in thousands so that we reduce the figures, or even in millions. You just must, the point is you must be consistent. I've decided to work in thousands, so I'll be removing 3 zeros from every question, from every point. So from this question, we must first of all identify the sources of cash inflow. The major primary source of cash inflow is sales. So I'll start with cash inflow. In other words, the receipts. So sales, so there should be cash received from sales. What has been received from sales? And there is a lot of working to be done there. So I'll have working 1 to show the workings that I'll be making in relation to sales. Is there any other source of cash inflow? Accounts receivables, that is still cash. Sales, cost of construction, selling, distribution, and administration, blah, 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 blah. Interest payment, that is payment. Dividends, this dividends was payment. Capital expenditure, that is payment. Income tax, company wishes to maintain at all times, okay? Okay, so that is the only source of cash inflow. So we will have total cash inflow. Unfortunately, we had only one source of cash inflow. Let's look for cash outflows. There is a working, I'll come back to that. Cash outflows. Now, what is our sources of cash outflows before I go to workings? Next, an accounts receivables, cost of construction is the first. Cost of construction. The amount we spend in construction. So we'll have these as working too, because there is calculations we will do. Selling, general, and administrative costs. Selling, general, and admin costs. So I'll have these as working 3 because there is some working to be done. Working 3. Next, interest payment. payment of interest, payment of on bonds, etc. Interest payment of that. Next, we have interest payment. Okay, an annual amount of sinking fund payment, still that sinking fund payment. Next, dividends payment, dividends paid, okay. Capital expenditure, taxes, I'm just listing everything before we start reading again. The company wishes to maintain at all times a minimum, okay? So I think we have listed everything. If there is anything else, we will come back to it. So I wanted to start by explaining the format. You show the cash inflows, and then is when later on you show your sources of cash. So this is total cash outflow. And then once you have got your total cash outflow, you either get the difference between cash inflow and cash outflow, which can either be a surplus or a deficit. The difference between cash inflow and outflow is either a surplus, or a deficit. And then you come and add, some people add this cash at the beginning, it doesn't matter. Add opening cash balance, and then what you get is closing cash balance. So that is our cash flow format before we start doing any workings. So that is how the structure of our cash flow will look like. And then now we'll come to workings. Now, working one is on sales. Cash received from sales. But before we go to workings, any information that does not have workings, any information that does not have workings, you can post it so that you save your time in exams. So any information that does not have workings, you can post it. For example, interest does not have working. Sinking fund does not have. Anything that does not have workings, you post it so that you finish with it. So payment of interest, point number 4, interest payment. An interest payment of 275 million on 275 million. So we needed to have a working on that. Of bonds outstanding of what? 12%, sorry, is paid during July. So interest payment here, it is 12% times, let me have a working for it. Working 4. I'll come back to it because of the working, number 4. Because of the working, I'll have to calculate it. Annual amount of 95 million sinking fund payment is also made at that time in July. 95 million. So sinking fund payment, 95 million. So I'm working in thousands. Okay. Or this one, we can even calculate it. Interest payment is 275,000 times 12%, but I'll divide everything by 1,000 so that I convert it into thousands. So it gives you 33 million. What have I done? Here, I've just taken 275 million. The interest was on 275 million. So I've just taken the 275 million. I've gotten 12%, and then I've removed 3 zeros. It gives me 33. So with that, I don't need to do that working then, because I've already done it there. So what I'll put there is 12% times 275 million. So that is enough to explain that. Sinking fund dividends next. Point number 5, dividends. 15 million dividend payment will be declared and made in July. So dividends payment is in July. How much? 15 million, 15,000. I'm removing 3 zeros in every part. Next, capital expenditure of 90 million will be invested in the plant in the month of June. 90 million capital expenditure in the month of June. 90 million capital expenditure in the month of June. Next, taxes. Income tax payment of 1.5 million will be made in July. 1,500 in July. Next, okay, is now total cash. So we have posted everything. What is now remaining is the workings. Now, let's start with working one is sales. Cash received from sales. But in our sales, there is a January, February, March, April. So I can list all the sales, and then I'll list all the months in the workings. So there is January until August. January until August. So let's look at this. There is a Jan. I'll put here Jan, February, March, April, May, June, July. We may not need August because we were told to stop in July, up to July. We may not need August, but I can just put it just as a formality, August, because I don't know what can be asked in another question. So I want to post all the sales. Sales. I want to post all my sales. And before I post, remember, we have decided to work in thousands. We have decided to work in thousands in everything. Well, so let me post sales 135, 135, 150, 150. 135, 135, 150, 150. So 135, 135, 150, 150. And then the others are May 175, 250, 250 throughout. 175, 250 throughout. 175 and then 250. 175, 000, 250, 250, and 250. Okay, fine. Let's now be attentive in the rules that we are following for the sales. So let's read additional information 1. Accounts receivables, that is when we make sales, we receive some cash. Accounts receivable, 50% of total sales are for cash. The remaining 50% will be collected equally in the following 2 months. The remaining will be collected what? Equally in the following 2 months. Now look at my distribution. Out of that sales, cash sales is 50%. Now there is is 50%. There is a credit sales. So sorry, in the following 2 months. After 1 month, and then after 2 months. What is collected after 2 months? So the 50% of 50%. I hope you understand what the remaining 50%. And this one will also be 50% of 50%. I'll explain the meaning of that. First of all, let's calculate cash sales because that is fairly straightforward. So 50% times 135. So 50% is that. Now, in the remaining balance, what is the remaining balance? Look at this, what I'm doing here. 135 minus that is what we remain with as a balance, times 50% of that balance comes, sorry, I've posted it in the wrong place. Now, cash sales in January is 65, like that, February, March, April, until the end. Now you are being told in the remaining balance, a half of it goes to the next month, and the other half goes to, let me read, I used clearly the words used. The remaining 50% will be collected equally during the following what? 2 months. Equally during the following 2 months, equally. So the remaining is this minus that. For the month of January, the remaining will be collected in February and March. For the February, the remaining will be collected in March and April, like that. So for the January, the remaining will be this minus cash, the remaining, but it is a half of it. Divide by 2. So it's 33. And here, it will also be this minus that, close the bracket, divide by 2, 33. So out of the, we are done with January. January, we had total sales of 135. Cash was collected in January. The remaining amount, there is an amount that has been collected in February. There is an amount that has been collected in March. So you do the same calculation for February also. February, 50% is collected in February, but there is the remaining amount which is collected in March and April, like that until the end. But because I'm using Excel, it isn't my work. I just scroll and it calculates. It calculates the figures that I need. I just scroll like that and it calculates the figures. What does that mean? Let me choose, for example, April. April, we made sales of 150,000. 50% of it was received in April. In the remaining balance, a half of it was received in May and another half was received in June. So we scroll like that. Now, what is the total cash received? Total cash received. From sales. What is the total cash received from sales? So our total cash received, you just add everything now. You add cash sales plus after 1 month plus after 2 months. So 67. I scroll to the end. So here I'll have 0. There I'll have 0. There I'll have 0. So that is our total cash received from sales. So I can come and post what we need. We need the May sales. Cash received from May is 162. May 162, like that. 206 and 231. So we have the total. The total is cash inflow is that. Now we go to cash outflow. We are done with working 1. We come to working 2. What is working 2? Our working 2 was asking us for cost of construction. Cost of construction. What were the rules we learned? Cost of construction, 70% of sales. 90 of this amount of this cost is paid in the following what? Month. Is paid in the following month. So cost of construction is 70% of sales. So let's see 70% of sales. That was sales times 70%. 94. Okay. Now, you are told after that, you need to know that cost of construction, 70% of sales. 90% of this cost is paid in the following month. 90% in the following month. So out of that, there is a cash and there is in the following month after 1 month. So after 1 month, 90%. Cash will therefore be 10%. If after 1 month it's 90%, cash will be 10%. So we get that times 10%. That will be cash. I just scroll to the end. That will be the cash. And 90% will be after 1 month. So it will be this times 90%. So total cash paid. Cash paid for construction. Total cash paid for construction. Total cash paid for construction. And we are interested in which month? May, June, and July. May, June, and July. Okay, next, selling, general, and administrative cost is our next working 3. selling, general, and administrative costs or expenses. Selling, general, and administrative expenses. Again, I'll only calculate for what you have been told. Selling, general, and administrative expenses, 1.5 million per month, plus 10% of sales, plus 10% of sales. 1.5 per month and 10% of sales. 1.5 million per month per month. There is a per month, which you have been told 1.5. And then you have been told 10% of sales. Our sales is that 10% of sales. So total cash paid for selling, general, and admin costs. For selling, general, and admin costs. For selling, general, and admin costs. So we have it there. Again, we come and pick on that working. May. 19. And now we have finished all workings. So next, total cash outflow will therefore be 125 for May, 244 for June, and 346 for, so what is our surplus or deficit? 160 minus that is 36. 38, what is the opening cash balance? Remember, opening cash balance was 40 million, if you recall. You remember the second last point. The company wishes to maintain, no, the last point. On 30th April 2019, the company had a balance of 40 million in its bank. 40 million in its bank. So end of April is the beginning of May. They had 40 million. So what is the total they have at the end? Surplus plus the amount they had at the beginning. At the end of May, they have a total of 76. Now, this 76, which is closing in May, becomes the opening in the next month. What is the closing here? In May, in June, 38 plus 7 negative 38, it gives you 30. That here, closing in June is the opening in July. What is the closing? This plus that. So 76. Now, we were not asked to get the total, so I may or may not get it. It will not add you any marks unless you are asked to get it, but it will not add you any marks unless you are asked to get it. But I'm just putting it. So we are done with that part of the question. But there was another part of the question that was asking us. Let's look at this. Part B, determine whether or not, here, determine whether or not borrowing will be necessary during the period. And if it is, when and how much. So that part B, determine whether or not, so B, determine whether or not borrowing will be necessary, comma, will be necessary. And if it is, when and how much. And if it is, when and how much. That is the question. Is the borrowing necessary? When and how much? Now look at this. Look at this statement for us to answer. Point number 8. Look at point number 8. The company wishes to maintain at all times a minimum cash balance of 40 million. So the company at any time, it wishes to have a minimum, not maximum, minimum of 40 million at any time. Now look at end of May, and I want you to answer me in the questions and answers. In May, do we have 40 million minimum? Answer in the chat. I'm in the May. May, do we have a minimum of 40 million? Answer in the question and answers, sorry. Question and answers. Do we have a minimum of 40 million in May? Questions and answers. In May, do we have 40 million? Yes, we have. Because we have 76 million. Yet we only need what? 40 million. So we don't need to borrow in May. We need to borrow only in June and July because it is less than 40. Less than 40. You can see that. So we don't need to borrow in May, comma, we only need to borrow in June and July. In June and July. This is because the cash available in end of May is 76,500,000 is 76.5 million, which is more than the minimum of 40 million, which is needed in any given month. For June and July, comma, the cash available is less than 40 million, and therefore we will need to borrow the difference. to make it 40 million. So let's stand. Amount to borrow in June will be equals to amount to borrow in June. How much do we have? 38,750. 38,750 will be 40 million minus 38,750. Whatever value it gives you. 40 million minus 38,750. So we'll need to borrow how much? 1,250,000. Amount to borrow in July will even be bigger. Will be 40 million minus, I'm having two minuses. Minus, why two minuses? Because it was negative 76,000. So we will have to borrow So somebody can help me. How much we'll need to borrow there? It will be 40 million minus 76. In other, minus and a minus changes to a plus. Minus and a minus changes to a plus. So that is budgeting, cash budgeting. Unless there is a question, that is what we were to do. Because at any given time, we were to have a minimum of 40 million. Now here, we had 76 million, which is more than 40 million. Here we had 38,750,000, which is less by a very small amount. Here we had negative 76 million, yet we are supposed to have positive 40 million. So the amount to be borrowed is quite huge. Any question on cash budgeting, you can type in. So I've dismissed all. I've dismissed all questions because I think I've answered all there. Okay. Now, that is cash budget. Cash budget. Cash budget. The minutes that are remaining, I'm remaining with like around 20 minutes. Maybe let me explain some things on budgeting because the minutes remaining cannot enable me do a question. So other aspects of budgeting. So let me just explain other things on budgeting so that we wind up. Other aspects of minutes remaining cannot enable me do another topic question completely. Aspects of budgeting. Remember, you should read on fixed and flexed budget. But on Thursday, I've said on Thursday, I'll be covering it with CAT of management accounting. So you can join it if you so wish. Read on fixed and flexed budget. Remember, a fixed budget is a budget that remains constant throughout the activity level. On the other hand, a flexed budget, also called flexible budget, is a budget that is adjusted to reflect actual activity. A budget that is adjusted to reflect actual activity. But I think 20 minutes, I think we can do at least one question so that we save time. 20 minutes, we can use it to do one question. Maybe let me see activity-based costing question. I'm just trying to save our time, but you'll remind me of what we have covered and what we have not covered. Yeah, this is activity-based costing. I think we can do it so that we save time. So the question reads activity-based costing. So let's solve this question on activity so that if there is a question on activity-based costing, you are in a position to comfortably respond to them. Now, I'm picking on April 2022, question 1B. April 2022, question 1B. Nyigi Company, April 2021, question 1B. We are on activity-based costing. Nyigi Company Limited produces 3 types of products, U, V, and W, all processed from similar raw materials. The company prefers an activity-based costing as a good method to make an improvement in respect of costing. The data regarding their products for the last year, 2021, are provided below. We have details for U, V, and W. Production sales units has been given. So we have the selling price per unit, material usage, etc., down labor, machine hours, number of production runs per annum, number of purchase orders, and number of deliveries. The price of raw materials remains constant throughout the year at 240 per kg. The same way, direct labor costs for the whole workforce was 2,800 per hour. Annual overhead costs were given. They are required. Calculate the cost per unit of each product using A, B, C. Cost per unit. So we are looking at cost per unit of each product using activity-based costing. So cost per unit of each product using activity-based costing. So we have a product called U, we have a product called V, and we have a product called W. To get the cost per unit, you will have to add, of course, the currency is FRW. Okay, that is our currency. So you will start by direct materials. So direct materials cost per unit, not per hour, not per anything else. Direct material cost per unit. Look at this. Material usage, this is kgs, is 20 kgs per unit. But the price of raw materials remains constant at 240 per kg. So it will be 20 times 240. Here, it will be 30 times 240 to give you the material cost per unit. Here, it will be 40 times 240. So we will be in a position to get 20 times 240. It gives you 4,800. Here, 30 times 240. It gives you 7,200. And here we have 40 times 240. It gives you okay. Now we are done with direct materials. Next, direct labor cost per unit. Labor cost per, here you see direct labor hours is 2 hours, 3 hours, and 4 hours. Here you are being told the same way the direct labor cost for the whole workforce is 2,800 per hour. So it will be 2 times 2,800. Sorry, 2 times 2,800. Here it will be 3 times 2,800. Here it will be 4 times 2,800. So what you get there is 2 times 2,800. Here you get 3 times 2,800. And here we get 4 times 2,800. So what is the direct cost, or what we call prime costs? Prime costs per unit. So prime cost per unit is that is direct cost per unit. I was just doing this question because we remained with time. And then you come and add overheads, overhead cost per unit. Now, here we'll have to have working one. Overhead cost per unit to give you the total cost per unit. Total cost per unit to give you the total cost per unit. Now, in order to get the total cost per unit, you'll need to calculate workings. So look at this, workings. What is my working one? Working one, I want to calculate overhead cost per unit, and I'm using activity-based costing. Now, in activity-based costing, you must have the cost pool, a column for the cost pool. You must have a column for the cost driver. You must have a column for the total. And then product U, product V, and product W. Okay, so each cost pool is given here. So there is the first one, machine set up cost. There is machine running cost. There is procurement cost, and there is delivery costs. Now, what is the cost driver? What is the basis of apportionment? In other words, what is the basis of apportionment? Let's start with the last one, delivery costs. These are the cost drivers. These ones here are the cost drivers. Labor hours, machine hours, number of production runs per annum, number of purchase orders per annum, and number of deliveries. What is the cost? Again, in questions and answers. What is the cost driver for delivery costs? Delivery costs. What is the appropriate basis of apportionment? Basis of apportionment of delivery costs. Question and answers. What is the most appropriate basis of apportionment? Thank you. Number of deliveries. Number of deliveries. Thank you for that. Procurement costs. Again, question and answers. Procurement costs. Procurement costs, which is the most appropriate? Procurement costs. I'm checking question and answers so that I'm not the one to provide everything. Procurement costs, which is the most appropriate? Questions and answers.
Number of purchase orders.
Number of purchase orders. Number of purchase orders. Okay. Machine running costs. Machine running costs.
I think it is machine hours.
Machine running cost is machine hours. But please take note, machine hours, all cost drivers must be per annum. Per annum. I'm stressing that. Per annum. Because what is given here is per unit. So how will we get per annum? It will be 1 times 300,000. I hope we are together. Next, machine setup costs. Number of production runs. But if number of setups were there, we could have used number of setups. Number of production runs. Now, what is the total amount? I may not complete the question because of time. 000, 531. This is 1328000. This other one is 960,000. And this other one is 1086000. Now, what we do, for example, if I start with the last one, delivery costs, we share this 1 million using number of deliveries. So you will have to get the total number of deliveries.
On the amount of delivery costs, you have been confused.
What have I put?
Is 1,086,400.
Thank you. There. Is that what you are referring to?
Yes.
Thank you. So what I'm trying to do is this. So you will have here, you will have total overheads. And then here you will have production units. And then you will have overhead cost per unit. Now, production units, you can see them here. Production units are 300,000, 240,000, and 360,000. I'm just explaining what we were to do there. Please, you'll try to complete the question before our next session on Saturday next week. Now, for example, delivery cost, you'll come and pick the number of deliveries. Can somebody add for me 96 plus 60 plus 62? How much is it? Can somebody just quickly add and give me so that I explain what to do? 96 plus 60 plus 62. How much is that? Just volunteer, you unmute.
218.
218. So what you do here for you, you will take 96 over 218 times that 1 million. The next one will be 60 over 218 times what? 1.8. You get it there. The next one will be 62 over 218 times that amount there. So you get that. You repeat the same from number of purchase orders. What is the total of number of purchase orders? Again, we are running out of time. So somebody just to add and shout. Number of purchase orders, what is the total? 48 plus 56 plus 84. How much? Just unmute if you have the answer.
188.
188. So what will we do there? We will take 48 over 188 times 960. The next one will be 56 over 188 times 245. The next one will be 84 over 188 times 960. The same for machine hours and number of setups. You get the total there. Overheads per unit will be the total overheads divided by number of units. So the answer you get here is what you transfer there, and then you transfer there, and you transfer there, and it will give you the total cost per unit. It will give you the total cost per unit. So please, in your free time, complete for me that. Now, ICPA will share with you. I don't know if they will share with you immediately or if we finish the revision, but I think I'll ask them to share them by tomorrow. To share, let me do some editing on this and then share and then practice this question and complete it before Saturday class. So in short, we have revised 3 topics. We have revised standard costing, we have revised budgeting, and we have revised what? Activity-based costing. So remember, I've said the answer you get here is what you'll transfer. Let me just put it there. The answer you get there is what you transfer there. The answer you get there is what you transfer. So once you have completed this, when ICPA shares with you this Excel sheet, just complete it. And then what will be the total cost? It will be this plus that. I hope you understand me. So the total cost will change because there are some answers that we expect here that I expect you to fill for me. How do we get this? It is this total divided by 300,000. How do you get the total overheads? The total overheads will be addition of this, so that once you complete, the answer automatically comes out. So what I want you to do is just to fill this gap here. Whatever I've marked in yellow is what I want you to get. Whatever I've marked in yellow, this will automatically change. This will also change. Why will it change? Because we have not yet completed it. So whatever I've marked in yellow must change. Of course, this will also change. So whatever I've marked in yellow, please make sure you complete it for me. I hope we are together. These ones will change. Why will they change? Because there are these still figures missing. So whatever I've marked in yellow, once ICPA shares with you this, you'll be in a position to get it. Otherwise, let's stop there. Thanks for your attendance. I'm seeing the attendance was very good. That is just the beginning. Again, let us meet the same time next week on Saturday. Maybe some quick feedback as we end. Any feedback? Positive or negative feedback so that we end? You can just unmute.
Thank you, sir. It was good, very good, and we think the next time we will rush and make complete more chapters. Thank you.
Okay, welcome. So I think let's stop there. I'm seeing somebody raised the hand. Is it now or earlier? Okay, he has removed the hand. Okay, then that's okay. I'm trying to look for the person who has raised the hand. If you have raised your hand, you can just unmute and talk. Okay. Let's stop there. We meet next week on Saturday. Thanks for your attendance. Have a good afternoon.
So thank you, Charles.
Thank you. Who is that speaking?
You are hearing Felicien.
Okay, thank you so much. Okay, sorry, I didn't return. Sorry. Forgive my protocol.
I
was
yes, I was back some minutes ago, and I didn't want to interrupt class. And the session was very okay and brilliant, and I think the output will be greater than what we expected. And again, you will share us your presentation and any materials that you want us to share to students. So for us, we will share it probably tonight or tomorrow morning, depending on when you send those materials.
I'm going to send in the next 30 minutes. Thank you. Continue.
You're most welcome. Yes. So without taking much time, because probably some of them has another session afternoon. So I want to remind them that there is another session scheduled next weekend, Saturday, from morning up to I think it will take like 4 hours from 8 a.m. So they can check on timetable. And also I know that, Charles, you are aware of that.
I'm aware, and I've already communicated to them.
Okay, I didn't know. So let us call it a day, and wish you all to enjoy your lunch. It's time for.
Thank you, and thank you for arranging for this. So let's meet next week on Saturday, the same time, 8 in the morning.